Hi, welcome to this short video from Platinum Media about the Platinum Opco Propco site finding service. My name is Emma, I'm the Managing Director here at Platinum. I'm joined today by Chris Wilkins from Wilkins Southworth accountancy firm. The site finding service that we've designed is all for business owners who are looking to transition from renting their commercial space to becoming an owner-occupier. And I'm joined here today by one of our power team members, Chris, who's going to do a short Q&A with us to hopefully give you some interesting and helpful information and things that you need to consider if you find yourself in that category of people. So Chris, would you like to just do a short introduction to yourself?
Sure, my name is Chris Wilkins. We act for Platinum Property Partners. We've acted for the business and Richard Davies for over 25 years. We act for a lot of the large property businesses in the UK.
Okay, so Chris, why don't we start with just talking through some of the top tax considerations for why somebody, an existing business owner, would consider buying their own commercial space as opposed to continuously renting?
Sure, so one of the reasons why Richard thought it would be a good time to have a chat is that we've actually done this, and our main concern was security of tenure. So when we were renting before, we were at the behest of a landlord. He could have increased the rent, could have increased the service charge. And what we wanted to do is to make sure that we had some security for our business. And that was the main reason why we wanted to buy the property.
So that's obviously a really interesting point. Is that sort of financial security, so that you had sort of clear projections over how much you were going to be outlaying every month over a long period of time, or are you talking about location and sort of client base? Well,
we're based in Barnes, so we wanted an office building in Barnes because we're Barnes accountants. The other factor that we had to bear in mind is that if we bought the building, we had a loan. In that case, the loan was 15 years and it was fixed. So I knew what I was going to pay every year for 15 years. Whereas with the rent, it could have been increased. It could have been that the landlord, after say 5-year lease, kicked us out. The problem then is we wouldn't be Barnes accountants because we might be down the road and we might lose our client base.
Absolutely.
So it's really important that we found a building that suited us in the right location that we could afford.
So you've got security of tenure, peace of mind, and also freedom, I guess, I know Richard, our CEO, talks a lot about freedom to create an awesome culture. So being able to sort of design your own space that is truly suitable for you and your colleagues, I guess.
Yeah, the other thing is I didn't mind investing in it because of my building. So if I wanted to enhance it, make it better, make it more interesting for clients, all those extra costs I knew is for me rather than for the landlord.
So Chris, one of the elements of the site finding service that we support our investors with is the sort of creative mindset that you need when you're investing in commercial property. I think it's not always the case that you find the perfect commercial space for your existing business. So having sort of quite a lot of experience, I think, is often really helpful sort of on how you're going to best utilise the space, short and long term, to get the most sort of return for your investment. So again, from a tax considerations perspective, what should our prospective clients be sort of considering about the type of building that they might be looking to invest in?
So we looked for obviously commercial premises because that's what we wanted, but the building was a bit complicated. So the ground floor was a supermarket, the first floor is our offices, and the top floor was residential. So then the question is, from a tax point of view, is what do we need to consider about when we buy the property, what taxes are involved, and then how we deal with those taxes. So we needed to decide how we're going to buy the building with regards to the financing it, whether we'd be charged VAT, whether we'd be charged SDLT, and what the extra cost of the total purchase price would be for the building.
Sounds complicated, which is, again, it's great that your background and your whole occupation is in tax, accounting. For a lot of the people that come through our site finding service, they might be operating out of workshops, working in storage facilities, have a whole sort of plethora of background. So actually getting your head around all of this stuff is complicated. It's not a case of just buying a straight building and necessarily moving your business straight into it. There are other sort of very big considerations to be made.
So our concern was the building was really too big for us.
Right.
So the problem then is that could we sublet any of it? If we could sublet it, how would we do leases? Were we allowed to sublet it? Could we do licenses rather than subletting? how we could ensure that we got security of tenure for our tenants, because that was the basis upon which we'd borrow the money. So therefore we had to make sure we've got leases in place for the ground floor that would give us the ability to justify the loan to the bank.
So that's another really interesting point then. So in comparison to renting your own space, actually you were looking at moving into a much larger building than what you actually needed, and then you were going to create additional revenue streams from the upper floors and the space that you weren't personally going to be utilising for your business.
Yes, and then the problem is then if we, for sake of argument, had rented out some of the first floor that we weren't using, whether the bank would actually lend money on that if it was just a licence rather than a sublease. And when we bought the building, we didn't actually have the tenants lined up. So the problem then is we had to rely on the rental income from ground floor, and it's the case of, well, how long is the lease? What's your tenant like on the ground floor, as to how much the bank would place reliance on that as a source of income for the loan. And then we had to justify the balance to pay the purchase price. But in addition to the purchase price, if you're charged VAT on top of the purchase price and SDLT on top of that, it can make it very expensive. And the other thing we had to consider is getting space planners in to try and slice and dice the first floor to get a bit extra rent out to make it all the numbers add up.
So it doesn't sound overly straightforward, does it, Chris? But that is one of the great things about this service. We have worked really hard to pull together the right power team members so that when you are presented with a property such as the one that you ultimately acquired, the whole sort of package around how you strategically maximise the space and the investment, we support you with that, which is great.
Yeah, because what you'll find is that when you purchase such a building, you'll not only will you need tax advice, you'll need to work out whether you can afford the loan, you might need some projections, you'll need a surveyor, you'll need some planning guys, it may be that you want to do some extensions.
Absolutely.
So it's a full complement service that you would need in such an example.
So Chris, as an existing commercial investor, somebody that has gone through this transition, moving from rented to owner-occupier, what are the types of considerations that you need to have as a buyer for the vendor that's actually selling the property to you?
So prime example is, again, my building. It was owned, my understanding, it was owned by a solicitor. We dealt with him, really nice guy, we arranged a purchase price. And then I got a phone call and a guy said, I understand that you want to buy the building. And I said, well, I've already arranged that. And he said, no, you haven't. He said, the building is actually owned by a pension fund. And I'm the pensioner trustee. And therefore you negotiate with me, not the person you thought owned the building. So therefore we ended up negotiating with a pension fund who we didn't even know owned the building.
Wow.
Now, in some instances, you might find that the vendor is a limited company. It may be an individual. And you may find that that adds in extra complications, such as if the limited company wants to sell you the shares and the company owns the building, it's a completely different scenario than if you buy a building direct. And there's lots of extra tax implications to bear in mind in that scenario.
And is this sort of information readily available? Obviously in the residential market, the listings that we're all used to seeing on Rightmove are generally pretty comprehensive. Agents are fantastic at giving quite a lot of information about whether a property is leasehold or freehold. How did it take so long to find out who the actual owner was?
Well, to be fair, I had no inkling that it was owned by a pension fund in the first instance, and the solicitor hadn't told us. And some people, indeed, I had a potential client rang me this week and said, I'm going to buy this property, it's owned by a limited company, presumably that's not a problem. And I said, well, that's completely different, because if the property is owned by the company, you're actually buying the shares in the company, not the property direct. The problem then is you own a limited company which owns a property. That scenario creates additional complications when you do it, such as due diligence on the company, because what liabilities does that company have as well as owning the property? And then you'll have to get warranties and indemnities on the vendor to make sure that what you're buying is just the property and there's not other things in that company.
So what we're saying here is that when, if you don't go through the site finding service, and this is something that you sort of attempt as an individual on your own, Buyer beware. It's not necessarily just going to be a straight individual that's selling the property. It could be many different entities, limited companies, pension trusts, funds.
Yeah, so in this scenario, what the guy said is that this property, say it's worth £1 million, so I'm buying the shares, then I'm going to mortgage that property to pay for the shares. But the problem is that the property is owned by the company, so therefore the loan is to the company, not to you to buy the shares. So then how do you get the money out? But this is an enormous added complication that he hadn't taken on board.
And were there cost implications ultimately?
Yeah, because say for the sake of argument, this property was bought many, many years ago for £100,000, and let's just say it's worth £1 million now, then basically the guy is buying the shares for £1 million. But the trouble is that this company has a potential corporation tax liability on £900,000, which is the increase in value of the property. Currently, corporation tax is at the rate of 19%, but we know in 2 years it's going to be at 25%. So that guy would have a corporation tax liability, depending on when he sold the property, in the company of over £200,000, and he hadn't borne that in mind.
Wow. So, Chris, as well as doing thorough due diligence on the vendor selling the commercial site, what about the purchaser? Obviously, you'd think, oh, that's me, but actually there are multiple ways of buying commercial properties, and they each have the different sort of benefits and tax considerations for the individual to be aware of. Can we talk through that?
Yeah, sure. So with a commercial property, I don't have the concerns about Clause 24. And Clause 24 was what George Osborne brought in July 2015, when he said that you only get tax relief on buying a residential property at 20%. You don't have that concern with commercial property. So therefore, I would get full tax relief on a loan I take out if I bought the property personally. If I didn't have enough money, I may consider, if I had a money in my pension fund, a pension fund, say a SAS, small self-administered scheme, could buy the commercial property. And it's a case of trying to utilise the funds I have available to make sure that the deal would work for me. So I might do that, or I might buy it in my limited company if I did have some cash in my limited company, because otherwise for me to take the cash out of my limited company, I'd crystallise an income tax liability, which I would have to suffer at perhaps the highest rate of tax, could be 45%. If the company bought the property, then I've basically got three options: buy it in my own name or in a partnership, buy it in my pension fund, or buy it in a limited company. So I have got choices. It depends where the cash is available for me to utilise on the purchase price.
And is that something that you'd be able to support investors with on their way into a transaction, so that they were totally aware of how they're actually going to fund the purchase? Or is there a best option that ultimately people should be thinking about in advance of getting out and looking for a new site? Well,
what you've got to really do is to do justice to the client. What you'll find is there's a lot of mediocrity in the market. So there's a lot of accountants who just look at it very blasé. And so we came across one where a client went to a firm of accountants. They suggested their limited company buy it. But when we actually looked in depth, it was much better for them to buy it in their own name. So generally speaking, if a limited company buys an asset, then that asset, because it's owned by the company, when you eventually sell it, you have to sell the property, and then any profit made is taxed as a chargeable gain in the limited company, and then you've got to get the money out. So I know that in 2 years' time, corporation tax is going to be at 25%, so any profit on the sale of the property owned by a company is going to be taxed at 25% of the company. Then if I take it out of the company, then I could suffer high rates of tax, 40, 45%, or dividend rates of tax.
So long-term planning really does factor into this.
Yeah, you've got to, what we do at Wilkins Southworth is we work out the exit before you buy the property, such as you need to consider your capital gains tax liability, your potential corporation tax liability if the company owns it, what the income tax liabilities are if I want to take it out from the money that I have in the company. So you've got to look at the long-term exit before you go in to buy the property, and all that with the taxes you need to consider on purchase.
So I think that's a really great point to raise, and one of the sort of elements of the needs analysis that we conduct as part of the site finding service is what are the current and future needs of the business. So I guess in that instance, if you're currently scaling your business and going from maybe being sort of a five-man operation, but you've got big plans to grow in the next sort of few years, maybe if the property is kind of a short-term acquisition to be sold and then a larger property to be purchased in the future, that is actually quite a big consideration to bear in mind before getting into something.
Yeah, I mean, the other thing is, say I was a VAT exempt business, which means that that's a business where I can't recover my input VAT.
Yeah.
I need to know if the property had been opted to tax, because if the owner has opted to tax the property, that means he's going to charge me an extra 20% on the sale price of the property. So I need to know things like that, because how would I recover that VAT that's being levied on me if I'm VAT exempt, for the sake of argument? So
yeah.
You need to go through a lot of those scenarios to work out the VAT situation, the SDLT situation, even before you buy the building, before you then decide what entity is going to buy the building.
And just on that point of VAT, if a property has been elected for VAT and that doesn't work for your personal business operation, would you say that would rule that property out as a potential, or are there ways to potentially address that?
Yeah, there's always ways. So say for sake of argument, I bought a building for £1 million. Then VAT would be charged at 20%, so that's £1.2 million. And then I pay SDLT on top of £1.2 million. But with our building, we didn't pay VAT, so therefore in that scenario, SDLT wasn't levied on 1.2 million, it was levied on 1 million. So we saved the VAT and the SDLT by making the right claims. So the figures are quite significant. So as long as you've got the right tax advice, and you do need to go to a firm that actually has done a lot of this before, because these type of questions have a multitude of tax, and it's not, you can't just look at it sort of as straight. You've got to look at it like that. And a lot of firms, because they call themselves accountants but just glorified bookkeepers, they haven't got that knowledge. And that's where you can come into big pitfalls.
Absolutely, and again, just to say from a service perspective, that's one of the things that we're really good at in Platinum, is pulling the right people together to create the right teams to support our investors, make the right decisions, and ultimately de-risk their investments. Excellent, thank you very much. Great, so it sounds like it's all very complicated. There's lots of different things to consider and factor in when going from renting to buying. Last question for you, Chris. For anybody that's watching the video thinking, actually, this sounds like something that might work for me and my business, one of the first things that they'll need to consider is how they're actually going to finance the property. So in addition to how they're going to structure the acquisition, how they're going to get funding in place, what advice and guidance can you offer people that are in that position?
Well, that's really key, because obviously you've got to get the finance to make it work. So in our scenario, we had to do a lot of examples to justify to the bank that the rent from the ground floor we could bring into our calculations, potential rent from letting out part of the building. Then we had to work out what deposit we could afford. Now, I think the bank wanted perhaps 20% in those days, but nowadays you can get some very low interest rates. And the beauty about that is then I know what my fixed rates are going to be. So if you've got a fixed rate loan for say 10, 15 years, you know what your outlays are. You're not reliant on the landlord increasing the rent or increasing the service charges. So I'm pretty happy that I know what is going out. Then I can perhaps spend a bit of money in trying to enhance the building, as long as I get the right lender. But like I say, we're very lucky in that if we are borrowing money, interest rates are extremely low at the moment.
And how early on in the sort of site acquisition process would you say that investors need to be lining up their funding?
Yeah, you'll be surprised how long this takes. You've got to get the lender on side. The trouble is that this isn't a straightforward situation. If you've got extra income to bring in, such as a lease from ground floor, part letting upstairs, you might find that your lender goes down a certain line, then he loses an appetite, so then you might have to go to another lender. Therefore, I would start this as soon as possible, really. So you've got to sort of get all your ducks in a row, because if they turn you down, then it's a big no. So you've got to make sure your finance is in the right place, and it is difficult, yeah.
So you need the right team around you. We can't push that more than we have on this video today. I think that calls time. Thank you very much, Chris. I hope you found that really helpful. There are loads of considerations to bear in mind when it comes to finances, funding and taxation if you are looking at potentially acquiring your first or a future commercial site to operate out of. If you are sat in a position where you're thinking, actually, this might be something that I'm interested in and would like some help with, then please do give us a call on the number below. We'll be happy to chat to you further. Otherwise, thank you ever so much for joining us today, Chris. A pleasure as always.
Thank you, Emma.